When working with the authority companies, there's a tremendous number of financing tools and offerings available to you and your family. We have everything from renovation loans, renovation lines of credit, home equity lines of credit, unsecured financing, 0% interest. We have a multitude of different options for you. And what we do is we work with you to find the right individual option that best fits your needs as an individual, as a family, and then also based on the position that you're in with your home. Your home is one of the largest investments that you'll ever make, and so we want to ensure that when you're financing a renovation project that you're getting the maximum return on investment, that you're improving the value of your home, and you're making wise decisions so that if you ever did decide to sell your home, that you're going to be able to get that return out of it. So we're going to look at multitudes of different tools, again, with lines of credit, with home equity lines of credit, renovation lines of credit, renovation loans, unsecured loans, and we use both local lending partners and also third-party lending partners. The process when working with a local lender is very simple. You're making a very personal connection with the lender. They are working through all of the details of your financial picture, of what you owe on your home, of what you should borrow, what you shouldn't borrow, and they're going to make you very comfortable with your investment. What the advantage is of working with a specialist like that is they're going to help you not only make sure that you're making the best informed decisions about how much you can afford every month. What we're going to be doing is partnering together to make sure that we maximize your return on investment. When an individual is making an investment like yourself, you want to make sure that whatever you put into your home, you're going to be able to get back out of your home, and you don't want to be in over your head. So having a trusted partner with us, and then also with your local lender and or a third-party lender, we're going to make sure that we're working collaboratively together to find you the best solution. The process when using one of our third-party vendors is that we actually set you up with the individual vendor of choice. There are multiple vendors, there are multiple interest rates, there are multiple different types of programs. And so when working with the authority companies to find the right package for you, the right option for loans, the right option for unsecured versus secured, we actually will work with you to partner and to be able to get you connected to the right individual and allow you to explore a few different options when working with those lenders. Again, as we've mentioned, there's no one size fits all, so we want to make sure that you have all of the options available to you, that you make the most informed decision. The connection with those individual services is very easy. A lot of the individual services are now done online, but there's a representative that will meet with you, very much like if you went into your local bank and you sat there and met with the banker. It's very similar to that process. So again, we keep this very simple for you so that you can make sure that you're making the best informed decision. Some of the financing tools that we provide become an unsecured loan option. And with an unsecured loan, that means there's nothing securing the value of what's been borrowed to the bank or to the lender. What that means is they're not tying your house to it, they're not tying your vehicles to it, they're not tying any other assets to that loan. It's very similar to a credit card where you receive a credit card and you use the funds as you desire and then you pay it back. An unsecured loan gives you that luxury where it's not tied to the assets of your home. So if you decide to get a mortgage or you decide to get a vehicle or another loan, you're not necessarily using those assets and securing those assets against that primary unsecured loan. Unsecured loans in renovation financing are a great tool for a lower value renovation cost. Anything under $100,000, you can use an unsecured loan option. So it's a really great tool. There are some very good third-party options that we provide for financing. There are some fees associated with that, and there's a lot of interest rate advantages. So we want to find the best fit for you when it comes to whether you choose a primary loan or an unsecured loan, and we'll find the right fit for you. When your remodel cost exceeds your loan amount, that's a decision that we want to go back and we want to say, is this something that you're comfortable with? Does this make sense for you to invest above what the actual loan amount would be for you? And that goes back to the question of, should I put my individual cash into the investment in my house, and will I get that return on investment? So in the case that we go through the process and we know that you're funded for X dollars, and we go through our concept contract, we make sure that we know the bids, plans, and specs, and we get you that fixed priced estimate. If that fixed priced estimate comes in higher than what that loan value would be for you, then we go back to the drawing board and say, is this something that you're comfortable to invest your own individual cash for the project to continue to advance and get everything that you wanted in that project? Or is it more important that we scale down on the project and look at some alternatives, like some cosmetic alternatives versus structural improvements to your home? Oftentimes in our process, the advantage of working with the authority companies is that we've already done a multitude of those options. So we're looking at, here's option 1, 2, and 3, and we're also working with the fixed priced estimate. So you're always in complete control. We don't ever have to worry about our costs going higher and higher and higher, and our team coming back and saying we need another $5,000, another $10,000, because we already know what that fixed priced estimate is based on the preliminary work that we've done up front. So again, you have choice. If you decide that you do want to invest more than what the loan value is, you simply pay the difference, but we're going to work with you and be your partner to make sure that we're all comfortable with whatever that investment is for you. One of the benefits of financing your remodel is that you can actually complete a larger project if you desire and pay that loan over the course of a longer period of time. So when you're looking at advancing a project, we want to look at the individual costs of buying at today's dollars versus the cost of what it would be if you had to save that money to then do a renovation, a second portion of your remodel at a later time down the road. So the cost difference of buying at today's dollars is very different, and financing it allows you the opportunity to do a larger project and to be able to keep the dollars on a monthly basis at a lower price point so that you can extend those dollars over the course of time. The flexibility of financing also allows you to be able to refinance if you choose to in the future, or pay down a loan or a line of credit as rapidly as you desire. So that gives you complete control. It allows you to spread the costs out over the course of time and allows you to be able to complete the projects that you desire in your home. When working with the authority companies, there's a tremendous number of options for financing, and one of the differences, big differences I guess, would be in the home equity line of credit versus a renovation line of credit. In a traditional home equity line of credit, if you go to your bank, they're going to finance you 80% of your current appraised value of your home. So whatever the value is of your home today, they're going to finance you 80% of that, and then they'll take away the amount that you owe on your mortgage and they'll give you that difference. In a renovation line of credit, what will happen is they will look at our bids, plans, specs, our estimates, and they will look at that and gauge the after repair appraised value. So the after repair appraised value, they will borrow up to 90% of that, and then they will give you the difference between that and your mortgage. Of course, anytime you borrow over 80%, you're going to be paying your mortgage insurance. Once your loan drops down below that 80% again, that PMI will drop off, which is a nice feature for people to be able to get a higher amount borrowed and to be able to increase the value of their renovation, which ultimately will typically increase the return on investment. So borrowing it with a home equity line of credit versus a renovation line of credit are very, very different tools, and we help you find the best fit for you. When you're determining whether or not you finance a portion of your loan, or a portion of your remodel, or you determine that you want to pay for a portion of it out of pocket, it actually becomes your own personal interest. So if you decide that you don't want to have the debt and so you want to take a portion of that and you want to just pay that off, you can certainly do that. What the advantage is, if you're using a portion of your funds and you're using a loan, the length of time that it takes to process a loan is a little bit longer. So by paying a portion down as a deposit or a portion of the project, what it does is it allows us to speed the project up a bit further and a little bit faster, which allows you to, again, lock in your costs, lock in and buy at today's dollars. So every individual will make a decision based on their own personal financial situation. And if they feel that it's in their best interest not to have the debt against their home, even an unsecured loan, and they feel more comfortable and they still want to do a larger project, it allows you to be able to finance a larger project and be able to pay whatever portion that you desire in cash. And it just allows you to extend your dollars and eliminates a portion of that debt so you don't have the additional interest rate and the additional fees that are associated with that loan. The difference if you want to pay for the entire project, again, what happens is you're able to extend your dollars further by borrowing. And by borrowing on your home or against your home, it allows you to spread that cost over a longer period of time. So in contrast, instead of using your individual cash or investments that you could otherwise invest in other high rate returns, you can actually take the entirety of the project and you can finance that over a longer period of time. Again, this all becomes a personal choice, and we help you make those decisions in what's best for you and for your family. A lot of our clients will choose that even if they do have the additional dollars and cash available, they'll finance it because they know that they're going to be able to extend their payments over a longer period of time. And then eventually, if the interest rate is a little bit higher that they're locking into, they'll be able to refinance that later on down the road. And again, it's a choice for everyone to make whether or not they want to use their own funds or they want to just finance their entire project. The biggest value again for you is that you actually will be able to increase the amount of work that you can get done at in your home, and you can buy at today's dollars while keeping your interest rate at a very reasonable interest rate. And then later on down the road, if you decide to refinance, you can certainly refinance as well.